Well, if you were worried that the election was going to be contested, we wouldn't know the answer by now. Not the case. We know who the next president of the United States will be. That, of course, will be Donald J. Trump. A Republican sweep the White House, the Congress, the House, and the Senate. So, and you've got your typical stocks or the usual suspects that you would have expected to be moving this morning. We're going to be talking some Tesla, DJT, you name it. We've got a packed house today. Tim Quas, Christian Fromhurst. Dennis is bringing on his own special guest at 9 a.m. So let's go ahead and get pre-market prep started.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, let's go ahead and bring Dennis and Christian Fromhurst on. How are you guys doing this morning?
Well, a little tired maybe, but I think raring to go. How you doing, Dennis?
Tired. That was a long night, and I was scrambling and trying to, trade. I traded up a storm. It was crazy action. We're going to break that down. We'll go into it all. Let's, Christian, just first break down the averages here. Joel is away today. He is traveling. He will be back with us, though, later this week, but he is traveling today.
Yeah, hey there. Good morning, guys. I hope that you can see my screen. If you can't, let me know. What I generally do is just do a quick rundown. I'm going to go through a couple commodities first, and then we'll swing back to what the equity moves are. So right now, I'll just start with S&P futures. We're looking at plus 2.2%, which is currently right now new highs. So, congratulations to market bulls. Let me say that first. I'm going to go through, like I said, I'm just going to go through a couple commodities with you, but here's what crude is doing. This is down 2.2%. And we could talk more in depth about all these moves because I think we've got a lot to talk about this morning. Nat gas this morning, which I always kind of look at, is up about 1%, although that's been kind of one of your weakest commodities recently. Interesting, the move in copper, which is down 4.6%. Again, these are really large moves. You're kind of breaking that recent range that you've got in there. Let's take a look at what the precious metals are doing. Gold is down, also getting hit, down 2%. So, perhaps that safety trade coming a little bit unwound this morning. Sorry if I can speak. Silver is down 3.6%. It's coming down into the 50-day moving average support. Here's where we got some really big, even more, I think, big moves. And again, we've got a lot to talk about, but look at this move in bonds that takes us out of this little range. For a while, for the last week and a half, this is 30-year bond futures, by the way. Yeah. And this has been kind of trading in a little bit of a range, but a lot of implications to talk about with bonds making that type of a move this morning. That's the 30-year. Let's take a look at what the dollar is doing. That's a awfully big candle. I just want to remind people that also there's always these currency moves. So for example, if you look at any of your international ETFs, like an FXI or an EEM, unless they specifically state it, they're actually, like, that ETF is short the dollar. So if you're looking to see why some of those are down this morning, it's because of the currency effect. Normally we don't have a up 2% move in the dollar. So that's going to be affecting like anything that you own internationally. And then Bitcoin, this was, I'm sure Dennis is going to talk about this in overnight trading too, but this was one of like the first things. And we talked about in yesterday's session, watching a couple things like DJT, Bitcoin, which, congrats to the Bitcoin longs. That gets us out above this pivot. Let's see if it can hold above 73,820 is a level that I'm watching to the upside. I mentioned I would swing back to equity futures. So we've got S&P up 2.2%. We've got the NASDAQ futures trailing a little bit, but still a healthy gain of up 1.6%. Really can't complain with that. But here's where here's where you've got the largest move, which is Russell futures. So you think small caps may be sensitive to interest rates? Not this morning. Again,
No.
you kind of have to think about things in terms of, hey, it's not just one particular relationship. You've got a lot of things. And Dennis, what do you think?
Okay, so we got so much to break down here. Thanks for all the information here, Christian. I mean, I just want to take you to the action last night because I was trading this and it was crazy. At a certain point, I would say, and I don't know if you can show the charts from last night, the S&P action here, Christian, but around 7 o'clock is when we exploded higher. And we were starting to get data that it looked like Trump was taking or leading significantly in a couple of the key swing states. And they grabbed DJT. Maybe that's the best one to bring up to just see the indicator. It was probably about, and again, maybe my timing is wrong because it was like a blur last night. I'm getting all the hours mixed up, but somewhere between 6 and 7 o'clock, DJT just blasts off into orbit where it was 34 at the close. It was trading actually down around 5 o'clock, went down to 32, and then just started it was just hanging out. And then it went 36, 37, 38, 40, all in like, it felt like a minute, like just grabbing them. I'm like, oh boy, there's got to be some data coming in that Trump's obviously winning, a couple of those key swing states. Tesla starts ripping, the whole Trump trade starts going, banks start exploding higher, all like in the matter of like a minute or two. It was crazy. The algos were definitely all over the polls. And, and I'm sitting there and saying, holy crap. I end up, because I was doing a little bit of market making, getting short a whole pile of stock. And then I'm scrambling and I'm like, okay, I'm short a whole pile of stock. This is not good, to be short all of a sudden. And again, I didn't short flat, but I was shorting higher, but I'm getting picked off by the algo. So then you got to scramble. So then I'm turning around and just picking up financials and trying to buy whatever bank I can, whatever financial stock I can. I was buying Burkshire Hathaway even. I was grabbing anything that I can because, we were ready for this. We had the Trump versus the Harris list. So I'm just going to my Trump list and just trying to grab whatever the hell I can off of it. Tesla, DJT, GEO, CXW, those stocks are gone. The algos grabbed those. They were just gone. If you look this morning at those things are up the most. GEO up 24%. CXW up 19%. We know okay, Tesla, we've already talked about it.
Let's go. Let's talk it. Okay, so let's break it. So I just want to go through with the first one that you mentioned, because again, there's a lot to go over. But so DJT, which is interesting because it's a big move in terms of percentages, but it's interesting that it is not taken out the highs from last week. So, again, there is a little bit of buy the rumor when I think with the betting markets were up even more. So again, a huge move, but very interesting to me that this does not take out the high. You mentioned financials. This is a whopper of a move, and just as you said, Dennis, like we discussed this yesterday. But I think you're spot on. I think this is one of the biggest.
You're just breaking up, Christian. I'm just gonna maybe just go through the charts. We can see your charts. Your audio is breaking up, and Christian again is not in the office, so forgive him. We've asked him to come on. It's last minute here because all of this stuff that's happened in the last couple of days here. So Christian's internet is not cooperating here. His audio is breaking up really badly here right now. So we'll just, me and AB will just handle that until you get your internet fixed. But if you can just stay with us because Christian's controlling the charts here too, because Joel is away. So we're kind of like with Joel away and no charts here too. Obviously, we don't have Benzinga either. So it's a little bit of an issue. But Christian will get his audio just worked out here for a second. AB, I just want to get your thoughts here as well because you're silent here in the background. You're watching, as the polls come in, as we're getting more data from where we stand last night. What were you doing? Where were you when everything was going down?
So I was actually at there was a little local watch party here at a bar in Detroit. So I was with some people, and yeah, it was interesting because as the first numbers started to roll in, like you said, DJT and whatnot actually dipped, and it looked like. The prediction markets were kind of swinging the other way. And then as soon as that happened, that basically lasted for 10 minutes. And then, I think there were some signs like earlier on in the night, some counties in Virginia that people were looking at that really showed that Harris was underperforming Biden's performance in 2020. And some people were, saying, oh, you can't extrapolate too much from this. But then, whether you were looking at the prediction markets, whether you were looking at the price of Bitcoin, whether you were looking at, Tesla or DJT stock, everything was kind of trending in that direction. And then as the night went on, of course, it was clear to me by, I would say 9-10 p.m. that it was like, okay, this is going to be a decisive Trump victory. And like I said, you get the obvious winners, Tesla, DJT, you name it. But I'm honestly like pleasantly surprised by the overall market reaction, the S&P.
Yeah.
And I don't know. I guess my question to you, Dennis, is like, how long can these names, if we're looking at the Tesla, DJT, like they can't just go up every single day till Trump's denied?
No. The knee jerk, and this is a great question. We're going to bring Christian here because he's getting his internet. His internet looks better now. What we might try is if your internet breaks up again, Christian, we might just put your face to the background video, and then maybe your audio will come through. But I want to get your thoughts here too. But I'll just answer AB's question. These are knee jerk reactions. These are knee-jerk reactions. I think that's where Christian was going to when he was talking about, DJT not making a new high. I mean, I always talk about a stock needs a catalyst. It needs something to look forward to. And think about even the VKTX. We get the good data, the big pop, and then it's like all of a sudden, there's nothing to look forward to because we've got the data. The problem with DJT, and people are buying it this morning, and they were buying it up, how high did we get, Christian? We get to 50 overnight? DJT, he's bringing it up.
Yeah, I think it looks like around 54.
Holy. So the problem is when you're coming in and chasing these things is the people selling to you are the people who are already positioned in the thing. And now you're maybe wondering, well, why is DJT leaking? Why is this happening when Trump won? This doesn't make any sense. Well, it makes perfect sense because this is a classic example. Same thing as VKTX, buying on the rumor and selling on the news. Now there's no catalyst for DJT. You can say, oh yeah, well, he's in the White House, so this is going to help the company. Maybe, but if we're relying on fundamentals here, there is no fundamentals for DJT. Maybe one day there will be, but all there is a story here. The story was this was the stock for the election. This was going to be, if Trump wins, this was the one that was going to explode. It did. It had its explosion. And that was probably last night the selling opportunity. I would be very surprised if this gets back to $50 here today. And I would not be surprised if this continues to leak. What are your thoughts here? Just cover the DJT because the thing's traded 33 million shares. Everybody's talking about it here, Christian. What are your thoughts on this? Because this was a knee-jerk reaction, and sometimes knee-jerk reactions don't last.
Well, don't forget they reported earnings last night too. What a day,
which were meaningless.
Yeah, I know, but I'm just.
But they did, yeah.
I just thought the timing was crazy.
Funny.
I think it's kind of like we spoke about yesterday morning, is that you don't really know what to do with this stock because who knows if Trump can have ownership of this stock. So that could be, I think that there's a lot of like ramifications about it. So yeah, I think a lot of what you're seeing, you did a great way to that's exactly the phrase that I was going to say is knee-jerk reaction. But I don't know what people are going to want to do with this. And I think he's tweeting as well. So I think
he's back on Twitter.
Yeah,
and best friends with the one who runs X.
Right.
I mean,
exactly.
That's an issue.
Do you want to talk about Tesla next? That could be
let's just talk. So my thoughts on DJT is I would not be chasing it at this point in time here. I think the easy money has been made here, and you could have some catalyst exhaustion here where there's nothing to look forward to. Think like the VKTX trade. Would not be surprised if this gives a lot of the gains back. That's, the concern. Obviously, there's still people excited. They're coming in. They're waking up. They're buying DJT. But when it comes down to it and the institutional money manager gets to his desk, this is a retail-driven stock. I don't think there's a lot of institutional money managers, Christian, that are coming into DJT and saying, yeah, let's load up because the fundamentals just aren't there. But the Tesla is a different story. The fundamentals are there on Tesla. Let's just break down that action. It's up 32 points. It's a knee-jerk reaction as well. So keep that in mind. It is a knee-jerk reaction as well. This is a big pop. If I was in it for a trade, I would probably ring the register on all these pops because you get 12% overnight. I mean, the expected move, we looked at it yesterday, was $15. This is twice the expected move. So this is, a huge pop for Tesla here. Talking against my book, it's the biggest position in my long-term portfolio. I believe in the long-term story. I believe that, that Trump getting in is going to be good for Musk and regulation. So all that stays intact. But that's a lot, that's a big pop just, overnight here. What are your thoughts, Tesla?
So first of all, from a technical standpoint, and by the way, congratulations. I know that you've had a lot of conviction in this name, and
don't congratulate me and tell him out.
Well, you can sell it any time now.
Yeah,
so, yes.
No, I'm holding.
Well, okay. So I can't congratulate you once you sell. But this takes out. I was just showing like where this is trading pre-market, which is right around 288. I would watch this level. These blue lines for me are where there could be some overhead supply. So I would watch the 290 level and that does get you. That's new highs for.
Can you any possible to like go zoom in a little bit on that, because it's hard to see? Can we just there's a little zoom in feature there where you can zoom in and make it bigger? I think it's like on the corner.
Is that better? How's that?
A little bit, yeah. Okay, well, we'll go with that.
We'll work
again,
on that.
Joel's charts are going to be back, and obviously, Christian's got good charts here too. We just want to be able to see them.
Yeah.
So
I where we're trading pre-market is all the way up here, right? You won't be able to see that like on a daily chart, but and Joel, I think, has a nice way to kind of put these charts into perspective. So yeah, I think the 290 level is the upside level that you want to watch for today. But I think overall, I mean, that's a pretty decent breakout of the overall range. So, I think that initially, like maybe taking some profit, I would be taking some profits on that move and then watching and see. Yeah, I mean, all these moves are big. And like initially, that's what I'm doing with my portfolio this morning. I mentioned like I got long, I got long actually a couple financials yesterday. So right away, it's like, boom, like I'm taking 50% off. I was long the Qs as well. I'm taking 50%. I was long Bitcoin, right? All of these things I just slice on this type of a gap up move. Like, this is like just a gift, I think. So,
yeah.
I'm just basically just slicing off a lot of positions, and then I could manage once I've locked in that 50%. Now I can kind of watch and see how this market handles this as well.
I'm concerned.
Go ahead.
So sorry. Go ahead.
Go ahead with the concern.
I'm concerned, and again, we're going to take it away from Tesla and the Trump trade just for a minute here, but I want to bring it back to the bond trade here.
Yeah.
Because when you see the TLT dumping 2.75% overnight, that is scary. So I know we come in this morning and we say, "Wow, Trump, stocks to the moon." Bank regulation, and all this is true. The bank regulation is going to be easier. We know Trump is, pro-business to, and maybe, it does change a few things, but the bonds do not like this. The bonds are concerned. And I mean, the best indicator, we can look to any bonds, but, best indicator, just look at is the TLT. You see TLT, when is the last time we saw a move in the TLT down 2.74%? And maybe people are saying, well, it's risk on. Maybe this is just, we're taking money from the bonds, we're dumping them in the stocks, and this is full risk on. But one thing that the TLT fall does is it causes rates to go higher when it falls like this. So long-term rates, again, going higher here once again. Is this, concerning to you, Christian, overall in the market, or is this just another knee-jerk reaction?
Number one, I think it is concerning to see yields move this much. But let's put it in perspective. Look at where we were trading. So this is the 30-year bond. This is just easier to look at. This is the 30-year bond futures because you could see the pre-market activity here. But, so yes, this overall move is big. But to put it in perspective, we have not taken out the lows from earlier in the year. So we're still in this range. Yeah, I mean, it would tell me that, hey, I would want to be taking profits in things like small caps a bit, and maybe the financials too, because the financials really don't like a lot of bond volatility. I think it's really going to be interesting with Mr. Powell not speaking today, but tomorrow. Don't
Yeah.
forget, we've got a Fed meeting tomorrow. So what is he going to like? He's got at least he's got some extra time, I guess, to kind of prepare what he's going to do. But there's still a 97% chance. I looked this morning at Fed Fund futures. There's still a 97% chance that they're going to cut interest rates by 25 basis points. So I don't know if they need to pump the brakes on the cutting of the interest rates to settle things down a little bit. But I think it's a good sign that, we're looking at some things and saying, okay, they're breaking out to new highs for the year. Like we looked at Tesla, for example, like we looked at S&P futures, but bonds are not breaking the lows from this year yet. So let's see if this can, I would be watching to see if this can stabilize. If this continues to go, if bond prices continue to go lower and rates go higher, that would make me more antsy to take profits quickly, to do it faster in some of my equity positions.
So again, we break out, we make new highs. It's never usually a great thing to be selling stocks when we're making new highs and, new all-time highs we're talking about here this morning. And I'm just trying to play devil's advocate to a certain extent because, everybody likes, it's good. I love the Tesla's up, 30 points here this morning. It's the biggest position in my long-term portfolio. But something just has me uneasy here. And I obviously know the bonds looking at TLT tank like it did is, one of the concerns. But I don't know. I just get concerned that this could be one of those, all this is just a knee-jerk reaction. And maybe we go back to, I don't know. I'm not saying all these stocks are going to give all their gains back, anything like that. And I mean, maybe the banks are a good place to look here too, Christian, because we haven't covered XLF. We haven't covered the big individual bank moves. I mean, Bank America this morning, BAC, if you want to bring this one up, was trading up almost 10%. It's up 7 now. So you can see clearly in a few stocks, there is some profit taking coming in. Some people saying, holy crap, these are really big moves, and I'm just going to ring the register. And we haven't even got to Bitcoin yet here either, which obviously, all of these trades, and then the solar trade, we could talk this Trump trade for 8 hours today, the Trump versus Harris, because there's so many charts to look at here. But when you couple it all in, the big question of today is, are all these just knee-jerk reactions, and do they revert back, to the mean? That's the big question here.
Yeah, exactly. And, I think keeping an eye on things like, having bonds on your screen, also having like what the VIX, and we haven't talked to VIX yet either, but
No.
you've got the classic VIX crush that's happening this morning. And VIX futures, I think, are down. They're down 12% right now. So, this would be something to keep an eye on. Like if the VIX kind of stays around this like middle teens area, then things are kind of pretty calm. If you start to see the VIX kind of perk back up to 20, right, that that would mean that, okay, after that knee-jerk reaction that you discussed, if we start to see volatility really start to pick up again, then I would agree with you that I would start to feel a bit uneasy about some of those moves not sticking that we've seen in the pre-market.
Money Mitch bringing up a good point in the chat there, just talking about the knee-jerk reaction that we saw back in 2016. The funny thing is, in 2016, the knee-jerk reaction was the other way. So the knee-jerk reaction, actually, if you remember,
Yes.
back to 2016, we went limit down on the futures when it was looking like Trump was going to beat Hillary, because everybody expected Hillary to win. It was like 90% in the polls. She was ahead everywhere. And then Trump's, pulled it out. And, we know, there's lots of reasons behind that. Maybe, people weren't advertising they were voting for Trump. They were, maybe saying things because, nobody was voting for Trump back then. Meanwhile, a lot of people did, like, the idea, obviously, of a Trump president. And then he won. And then the S&P futures tanked and were limit down that night. But then buyers started coming in, and they obviously realized, wait a second, Trump is going to be easier on regulation. He's pro-business, all that. Yeah.
What also happened there in 2016 was you had all this uncertainty. We didn't know what a Trump presidency was going to be like. And then when Trump came out and spoke for the first time, he sounded actually a lot more, I think, like level-headed and kind of middle than people thought. Like when he, accepted, he like wasn't, so I think there was a lot of uncertainty. And then when he spoke the first night in 2016, that helped I guess set aside some of that uncertainty because people said, okay, it sounds like he's not going to be, the fears were a little bit subsided when Trump spoke for the first time in 2016. Now we know what a Trump presidency looks like. We've had the precedent, and Jay brought up a good point earlier that some of the positive market reaction right now could part of it could just be the fact that we know, right? The market doesn't like uncertainty. So if the election was so close that we didn't know who the next president was going to be, there might be more things shaking out. So the fact that we even know today, I think the market likes that there's not that uncertainty there. It's also telling me, whether you look at just the price action in the S&P 500 or something like Tesla, it's telling me that the market doesn't really believe that these universal tariffs and everything are going to go into action. Because if the market participants really thought we were going to get a 10% tariff on anything and a 60% tariff on Chinese goods, I don't think we're up as much as we are today. And especially something like Tesla, which Tesla produces 60% of its cars at its Shanghai factory. So I don't think Elon's going to let Trump put in a 60% tariff on all Chinese goods. So I think
maybe they're going to get the exemption there because he's buddies. But AB, these are such fantastic points you're bringing up. One concern here, though, is there is some stocks that are pricing in some significant tariffs here right now. Look at Five Below. We haven't talked this stock yet, and we didn't have it on our list, but man, it's on our list here now because it's down 13% here today. We know those $5 dollar store stocks get a lot of stuff from China. That's how they are able to produce, $5 stuff. I mean, that is a significant fall. That didn't report earnings, folks. That is a tariff trade here right now. So maybe Tesla gets a pass, but Five Below says, I don't know, AB. And then you look at the China stocks this morning. China getting hammered, and we said that they were Harris stocks. We said that, we tweeted that out. Like FXI's down 3%, Alibaba's down 3%. Baidu's down 2%. I mean, it's, overseas here, or looking in China, this is a little bit concerning. But Christian, what are your thoughts here? AB bringing up good points. Is the tariff trade, is this a knee-jerk reaction here too? And maybe, it's not going to be as bad as, maybe what, some people think? Because Five Below is down 13% here today. Bank of America downgrading it to sell on fears of tariffs. So that's just happening here this morning.
Yeah, I mean, I think that's a great point that Aaron brought up. And if you look at the FXI, it's a down move, but it did not even take out last week's lows. So this is a 1 hour chart just so that you could see, this is this week's price action. This is last week's price action. So it's not that extreme as you might think. And, there's certainly a move that's happening, but to me, it's not extreme. So you got to remember too, I think that Trump likes to threaten the tariffs.
He does.
And he likes to use that as a bargaining chip. And I think that, that's how he's basically used it as a bargaining chip. And he likes to do the art of the deal where he's trying to negotiate, it's a negotiation thing. But I will say this too. I mean, what's different, because that was a very interesting point about what happened last time Trump won and those initial moves, which were down and then up. But, I think it was really interesting. The betting markets basically got it right. And I think that's also why, people were watching these betting markets a lot more than I remember the last two elections. I wasn't watching a Predict It or some of these others. So it kind of gave a little bit of a glimpse as what might be transpiring. So I think that also is why you're not seeing as dramatic of the moves. But there's certainly, as Dennis just mentioned, there's certainly going to be some losers that come out of this too. Look at First Solar. We talked about yesterday.
Oh my gosh, the solar is absolutely hammered.
Yeah, and so a huge move. But again, look at it hasn't taken out last week's lows. So okay. Big knee-jerk reaction, but and that's kind of how I would look at things today, is whether or not they're staying in the recent range. And believe it or not, first solar stocks really move, but this probably would be one of your most sensitive areas. Now, the solar ETF is moving a little bit more and kind of is going back to where we were. This is the TAN ETF.
Yeah.
That is coming. That's actually more dramatic of a move than what you're seeing in First Solar. It looks like, but
It's very close. 11% and 13%. I got a tan. So last night when I was getting picked off and short all this stock and DJT was flying, somebody's sitting there on the tan bid at 42 with an iceberg. And I'm like, well, there's a hedge for me. I'm like, because if Trump's going to win, that solar's going down. So I was able to get short tan, and that helped my day a lot because it could have been, a little bit ugly, but, I scrambled and I made out okay. But I was able to get short tan at 42, and I just covered it this morning at 37 and a quarter. So, there's definitely, again, having that list, and that's why, Christian tweeted it. We talked about it multiple times. Having that in front of me, just sitting there written down right in front of me really saved the day for me yesterday. And the list worked really well. Like, I think about all the trades, that we've made this year. That list was, exceptional to say, China, is going to be get hit. Harris, if Harris wins, obviously we had the China stocks, and if Harris doesn't win, those are the ones you short. But to your point, going back to solar, I mean, these are incredible moves for stocks that have already been massacred. But then you look, well, TLT getting hammered today too. I mean, this is a storm for them. I mean, they need long-term rates lower, long-term rates going higher. Now the administration comes in, and it's not for clean energy as much as Harris would have been. You just think, like, I don't know. Like, I don't know if I can say, the knee-jerk reaction, as much as I think a DJT may fade those gains eventually, I don't know if I have the guts to come in and call a bottom on solar here now, because everything just changed for those companies.
Yeah, and you've got two things going on. You've got the possibility of, it's kind of an out of favor trade, but then you've got the interest rate. So that's a tougher reversion type trade, because you've got two basic like implications going on. But are you looking at anything in terms of a reversion trade this morning, Dennis?
Yeah, well, like I said, the DJT, I think, and
Yep.
again, I don't know if I'm going to trade that one, but I think I'm not chasing everything here. It's almost though, it's just difficult because I'm thinking back to 2016. Money Mitch always brought that point, bringing back 2016, and AB talking about circumstances change. I mean, one thing to consider here too is they didn't have control of the Senate and the House in 2016, correct? I'm going back, I'm Canadian, but I think it was split, right? Was it split 2016? Chad, help me out.
Yeah, I forget. I
forget too. I think it was split. So Trump would be somewhat controlled, not controlling both the House and the Senate. There is a possibility here. Now, the Senate is gone red, and it looks like the House could go red too. If, and this is a big if, because we still don't know where the House is going. Somebody's saying he did have control. I think it was split. And the chat's saying, most of the people saying it was split back in 2016. Yeah, he had the Senate, but not the House. The House is up for grabs right now. We don't have that. We don't know at this point in time if the Republicans are going to take the House. If they take the House, then they're in complete control here. And then, like, Trump is going to be allowed to do a lot more things than what he would do if we didn't control the House. So I think implications and comparisons to 2016 may, not be, the best way to go about it if that House goes red. So, I mean, lots of things to think about.
Well, it is too. Trump's kind of a wild card in the sense that even though we've seen him for 4 years, at the end of the day, we don't really know exactly what the administration is going to look like. We have an idea, but obviously the cabinet and the people involved now is completely different from 2016. Trump's the only consistent. I mean, you had, JD Vance is a much different vice president than Mike Pence was. You obviously have guys like Elon Musk and Robert F. Kennedy Jr. now involved as well. So there's still, even though we have the precedent for what a Trump presidency looks like, we don't necessarily know exactly. The solar names, you look at clean energy right now, and you still, no matter what, have like private investments going in it. Obviously, those private investments might slow down if the regulatory landscape isn't as favorable for those names, which I think we can assume that will be the case. But I think proponents of that space or long investors in that space would tell you that long term, this is where energy is going, regardless of who's in office. And so, probably just some more volatility and bumpier road ahead for these names. But I don't know if it's like, if you're like a long investor and you love some of these companies, I don't know if it's just like writing on the wall, this stock is dead now.
It's tough. We almost like should play the waiting game maybe and like see,
Right.
is there a fade here? Is, there, the potential that some of these trades revert, or is there follow through? I mean, it's too early to tell here yet, but there's a lot of unknowns here. So I think just making a call and saying, yeah, well, solar will bounce back or the banks are going to sell off again. Maybe we don't have enough information here yet. We got Tim Quast in the background here too. Tim's ready to comment on all this stuff as well. So maybe we'll bring Tim into this conversation here right now because, I'm curious his thoughts here too, because there's a lot of implications here to discuss.
All right, let's go ahead and bring Tim Quast, of course, Market Structure Edge, on the show. Tim, how you doing this morning?
I'm well, thank you. Lurking in the background, as is my custom.
We're going to get you an intro. We're getting an intro for all these special guests here. Josh is working on that. But, we're on our own now here, Tim. So
I hear. Well, that's the capitalist way. So, you're in the right milieu. Christian, nice to see you too. It's been a while.
Nice to see you, Tim.
So Tim, let's just get right to it. I mean, we got a Trump presidency here. It was kind of predicted. But again, it was close, obviously major media had it pretty close. Maybe it wasn't as close as major media wanted to let us believe. But, it looks to be, obviously potential. And somebody's saying, it's 90% odds that the House is going to go red here too. It looks like Trump could have a high possibility of have complete control here. What does that mean for the markets? What are your thoughts? This is a big question. This is a brutal question to ask at the first one. How are you doing? Let's start with a nice question. Let's small talk for a minute. How was your evening?
It was, it was fascinating, and I went to bed early because I wanted to be, awake for this show, and I've got things to do. So I didn't see the outcome until this morning. And I'm just a market structure guy. I'm not a political pundit or observer. I do find it interesting that the lead up to this outcome was that this would be the closest race in history, and it wasn't close at all. And I think there will be a lot of discussion about that after the fact. I don't, I'm a free market capitalist, but to me, the users of Edge are all across the spectrum. It's not the reason, Edge is a tool for the markets. All my friends are across the spectrum. Politics are not the basis for my decisions, thinking, or relationships. But okay, so now let's, what should we expect from this?
Yeah, let's go to that. Let's go to Market Structure Edge. Can you show your screen here? Yeah. Take over for a second here, and let's dive into, what is happening. I mean, these are big moves and big implications here. I mean, I don't know where you want to start, but maybe just start with an overall market, conversation here.
I think it's interesting to see what the supply demand equation that's what we do. We focus on supply and demand in the U.S. equity market, and where was it heading into this election? And it's really fascinating. I'm going to back this up 3 years, and I'll explain what you're looking at. So, if you haven't seen this before, looks seismographic here, but here's what you need to know. The green part of the graph is the waxing and waning of demand in the U.S. equity market. It's a quantitative measure. We base it on the regulations behind Reg NMS, Regulation National Market System, and how trades have to be handled. So you can see, when there's a market bottom, demand tends to get very, very low, and supply, which is short volume, the Reg SHO Rule 201 data set, very high. When those things happen, that you're probably at a market bottom. That happened back in 2022, October of 2022. And then we were basically off to the races since then. Here's the interesting thing. The supply here in the market is at the lowest level since the end of the pandemic bull market. So you could say that no one was short the market heading into this election. The demand side to me was weakening, and it tells you that people didn't know. Nobody wanted to be short the market, because if you looked at whether you look at the political polls, the Real Clear Politics average, you look at the betting markets, you'd say, well, you don't want to be short this market, that's for sure. And that proved to be a good call. Now, the interesting thing is people began to remove money from the market. We could see it in everything at October options expirations. So going into the election, big institutions reduced their exposure to the equity market. It didn't have a big consequence because simultaneously, all the market makers who supply the liquidity in the market also reduced their short inventory. And so you have a market that could go either direction. Now, what happens? If you want to know what to do, because this is the most important thing as a trader, okay, should I now suddenly plow everything into the market because the new Trump trade is on? And you recall that when Donald Trump was elected the first time, now only the second president in the history of the country to be elected in a non-consecutive fashion to a second term. Well, I'll give you the good news and the bad news as a trader. And remember, one of the things I say all the time is one day is not a pattern or a trend. You have to be very careful about making decisions regarding taking risk on a one-day move. Here to me is the big risk. The market gives you good entry points when it drops below 4. I don't know if you can see on the screen, there's a green line here at 4.
Yeah, we do.
A red line at 6. So
sure.
It's just the long-term average of the market is 5.4, because more money comes into the market than leaves it. And you can think of that very simply. People put money to work in their retirement programs. There are required minimum distributions to people who retire. And the people putting money to work are putting more in than the people who are taking money out. So over the long term, there's more demand than supply. But for the market to sustainably create gains, it must have periodic entry points. It is a basic principle of economics. It's why an economy cannot grow permanently. Principles of permanent growth are flawed. You need resets because things become distended. Things that should go broke or could go broke should go broke. You have to have those things happen. Those things happen in the markets. The last time we had an entry point was in April. This was below the green. If the market the demand drops below the green line, put money to work. Well, has it? It touched it once, but this is a market to me that is aching for an entry point. I feel that what will happen, and if you look at the trend in supply, this was an epic decline in supply. That what always follows an epic decline in supply is a rise. And what always follows a long and distended period without an entry point is an entry point. And so I'm going to go out on a limb and say that no matter what, we may have a good trade here for a number of days, maybe even longer, but that there is going to be a correction in the market. I'm going to say that that's going to happen. And how will we know that that happens? And how will you know to get back into the market? Well, if you're using Edge, I would say when the market tops again and the supply side rises, you should be out. And maybe you have to wait for an entry point to know that it's over. That's
so at this point in time, you would not be chasing this move here. And I mean, and again, this is, something I've learned too. And Christian, you can comment as well, but 25 years of professional trading here. I know I've lost a lot of money chasing stocks, over the years. And, that's why I'm very prudent to say, okay, I missed this and I'll just wait for the next setup, as opposed to saying, oh my gosh, I wanted at 40, it's a 45. I better buy it at 45 because it's going to 50 and then it's back at 40. And it'd be like, what did I just do? Right. So you think at this point in time, maybe don't go crazy, and chasing all these banks and chasing all these, obviously IWM up. This is the biggest move in IWM. We haven't talked it yet. It's up 6%. I don't even remember the last time I saw it. Christian, when the hell is the last time the IWM was up 6%?
Oh, I think I know. I will say I remember IWM going ballistic when they came out with the COVID vaccine. That was one of the biggest moves that I've seen for IWM. So I don't, do I think that this move is warranted this morning? I think that, and there's a question back for Tim is, what was the supply and demand, I guess, for IWM, and I bet that it was probably a bit underowned, in terms of what we've seen. I mean, IWM has been back and forth, back and forth, back and forth, and there's a lot of implications about it. But I think that there's probably under positioning in something like that, because when you think safety, and you could see that the Qs are up, but the Qs are not up as much this morning, because that's kind of been more of the safety type trade, because all of those big, and I know it's maybe a little bit counterintuitive, but all of those big companies like the Apple, the Microsoft, these companies have huge amount of cash too. We've seen that before, and if you remember, again, completely different situation. But when that COVID vaccine came out too, IWM cranked up, and what underperformed was tech, because it had been performing. So, there's
Yep.
these little types of moves. But yeah, I'm really interested to hear what you got on what you see in small caps and that relationship.
And before I answer that too, Dennis, there are always things to trade. I mean, last week with declining market-wide broad, I was in Spain, but you can trade from anywhere. Declining broad sentiment.
Next life, I'm coming back as Tim Claus.
declining broad sentiment, and we're at month-end options expirations, October 31st, my birthday. I thought, well, there's clearly going to be volatility. So I took out a long trade in TQQQ, a short trade in SQQQ, biased it to the short side, and bought UVXY. And I just took 2% each day. It was a total low risk trade, and I just took a yield. And I think those kind of trades, supply demand divergences where you have high probability, they're always available to you traders. And we could talk about that. So there are always things to trade. What I'm talking about here is what are the longer term trends that I would expect. So now to small caps in the total market. Here's small caps. And so the average market cap in these 1,900 small caps with 5 billion of market cap or less. So it's not quite the Russell 2000, but it's very close. It screens out the larger elements, which always end up in the Russell 1000 anyway, where all the money is. So if you add all of these companies up, they're 2.5 trillion of market cap. That's it, right? It's 5% of market cap. So if you have BlackRock, Vanguard, State Street et al. Put 10 or 20 basis points of money to work in those stocks, they juice the entire index, but there isn't any liquidity. The average trade size in these stocks is $1,400. I won't even trade a stock unless it has at least $3,000 per trade of liquidity, because I can't get in and out of it. I will give up all my gains trying to get in and out of my position. They have the same problem. So you can get the index juice 6%, but now you got tracking errors everywhere. So if you're an instrument at BlackRock, a passive vehicle, and they got 100% of the net inflows. Actives are net sellers in the market and have been for 15 years. You have to keep these things in mind, traders, because they're the underpinnings, the machinery of the market that is very difficult for small caps to sustainably outperform large caps for that reason. Big money buys the broad market. I'll show you mega caps. Look at the total market. But here are the trends heading into the election. Steady demand, falling supply. That is a divergence. What will it produce? Well, if any money comes in, it's going to juice it. But the moment this reverses, we're going to have trouble. And I bet you in a week it'll be different. Total market, the Russell 3000. Flat demand, falling supply. Market's likely to rise. Let's go look at mega caps. These 114 mega caps are $44 trillion of market cap. They average $380 billion of market cap apiece, but their volatility is only 2%. What is it that index funds need? Less than 2% tracking errors. Otherwise, distributors won't market your fund. Okay, well, that's where all the money goes. So they look okay, but the demand trend is below 5. There's a big covering event right here. The market makers didn't want to be short that group, but it's why they underperformed. Right? There's a little less demand in the mega caps than there was in the broad market. So there you go. You get a little juicing. But this is where the money goes. And you just always have to keep those things in mind, folks, that the market is not driven, no matter what you hear all day long on CNBC, because the people who are on CNBC all day long are not quants, they're fundamental investors. So they're going to always come back to fundamentals. The market is driven by multiples and fundamentals and earnings, No, it's not. It's driven by BlackRock, Vanguard, and State Street et al. They have over 50% of all assets. 55% of all
Wow.
assets are in passive large cap blend, value and growth stocks. And they buy products, not stories. They buy the herd, not the outlier. That's the way the market works, and you have to realize that. So when you're trading, we're looking for the things where there are supply-demand divergences created by those machineries in the market. And that you can always do, but you have to be aware of what the conditions are.
It's interesting today. We see, and what we have seen in the past, and all trading is, from my perspective, is pattern recognition to a certain extent.
Agreed.
And I try to do it. Obviously algorithms do it to an extreme level. I try to identify new patterns that the algos haven't thought of yet. What we have saw over the course of the last couple of years really is mega cap gain at small cap expense. Meaning like small caps definitely underperforming for a long time now. Mega caps outperforming for a long time now.
Right.
Is the potential there that if we're going to start to see IWM rise 5.5% today, and this is not a knee-jerk reaction, but maybe it has followed through, just skeptical. Is there the possibility that some of that money could come out of the mega caps? Because I'm looking here this morning, QQQ is having a fine morning. It's up 1.7%. Tesla probably helping up 12. But under the hood, Amazon barely holding green. And again, the 200 wall of Bezos maybe be holding that down too. But Apple barely holding green. So there is some concerns here this morning. Meta. Again, maybe Meta, because we know Meta was STEM. They were pro even on there. Obviously they kind of had them as a Harris stock. It's down $4. So is the possibility there? This is the final question. I know there is a question here. Is the possibility there that the mega cap trade could exhaust here for a bit?
Yes, of course there is, and it wouldn't surprise me at all. The problem, again, if you begin with the premise, I always say that what is it that creates value in the equity market? Money. It's flows. It's wherever the money goes. That's what creates value. I explain this to public companies all the time. I talked to a board of a large public utility about a month ago about this, that you have to understand as your fiduciaries for shareholders, what is it that you can control, what is outside your control, and what is money buying? Well, it's buying products. Just look at these. This is the average trade size in these stocks. Look at their volume. Look at their market cap. What is BlackRock deploying? Hundreds of billions of dollars. People don't realize ETFs are created and redeemed at a rate of over $600 billion a month. All right, that's a massive movement of baskets, and you got to have size. So could some of that money come out and go into small caps? Yes. But the moment the small caps stop rising, and they will, because they'll immediately create tracking errors, they'll spray all over the place because they have a tenth of the liquidity of these stocks. They have a tiny fraction of the market cap, and it becomes a problem for passive money. They'll get fined. That's the problem. People don't understand that either. That, look, if you have tracking errors, you get in trouble, and it really disadvantages small caps. What there should be is a different market for small caps, perhaps, because it's not a fair market for small caps right now.
Tim, I've got one more question for you. And by the way, I think that's a great observation about the Qs, because like I said, they're not at new highs this morning. And I was long the Qs, and I've taken profits in the Qs because I don't think that that's the trade today, this morning.
I don't think so either.
Today. So my question
you
for
can
Tim
see
is,
that over here in the demand. I mean, Apple's 4.2 doesn't even have 5.0 demand. Meta's at 5 and bottomed, but it has been coming down to the bottom of 5. So you're exactly right. It's there in the data.
my question for you, because this is another trade that I'm long, is I got long biotech yesterday. I bought some XBI calls. What do you see there for biotech? Because I believe that that's one of those areas that is not over owned right now, and probably under owned.
Well, if you just look at healthcare broadly, and of course that's not the best way to do it. Biotech, is a major part of the biotech and financials, major part of the Russell 2000, right? But if you look at healthcare, it's pretty good, right? There's rising demand. It's not high. It's not a momentum ramp where you have a big drop into October options expirations. There was a good trade, then the trade changed. October 20 options expirations happens all the time. If you're using leverage, now my leverage expired, I'm going to change. That was the peak for demand in healthcare. It came down into the end of the month, another shift, October 31st. Now where are we? Flat supply, demand is rising again. Take the the more volatile components, biotech, and you probably have a trade. Now, be careful because maybe that trade runs only to November options expirations. That's how I would think about it.
It's hard to bet long. Like, think what you're saying. It's hard to bet long term against mega cap tech.
Exactly. You can't.
So you get these pullbacks, but they just get bought. The ETF effects are too strong here. And I mean, we've created a market that is just driven by ETFs. You know the numbers. It's more ETFs than stocks.
There are 3,000 roughly. Yes, and we track that data every month from the Investment Company Institute. There are about 3,400 ETFs. Not, that's across equities, fixed income, commodities, alternatives.
Okay, maybe not quite as many, but
but there's and how many stocks are there in the Russell 3000? Roughly 3,000, and it's 99.9% of market cap. So you're right. There are more ETFs than there are underlying products that they all depend on.
Wow.
Yeah.
Shocking. Okay, we're gonna let you go here, Tim.
Good to see you
thanks
guys.
Again. I mean, obviously, we want to get you back on real soon. So thanks, Tim.
I'm at your disposal. Appreciate you guys. Good to see you.
AB, you're on mute. You've had to do it for Joel. It was for Joel. That's the Joel tribute right there.
Hey, wait, so can we start something? If you're on mute by accident, there should be a penalty.
Tip jar.
Yeah,
tip jar. Yeah, you lose the tips from the tip jar.
All right. So thank you to Tim Quast from Market Structure Edge for joining us, of course. Just going through some other, sectors we may not have talked about as much. And there is a basket of stocks, you look at it from that are getting like a Mexico. I think like any international bucket of stocks that you're looking at right now is seeing some weakness just because, again, there's this uncertainty about what's going on with the tariffs and whatnot. So I was looking at a couple of Mexico ETFs this morning as well. I think EWW is one that is getting hit slightly this morning. Down 3.3%. So, I mean, you got your winners. The winners are the American stocks. And if you start looking at, basically anything domestic, especially in the IWM, we're pretty good here. But if you were in EWW or maybe some of these Chinese ETFs, still getting hit this morning.
I mean, every international stock, Christian, you can look at the data here too, but I'm just cherry picking. I'm like, they're all down. Europe is down. China is down. Mexico's down. Brazil's down. I mean, what's up? Is there anything besides U.S. stocks trading higher here this morning?
Well, it's like I said too. It's the dollar move. All of these ETFs are essentially short the dollar.
Yeah,
because they own an underlying local. You have to remember that they own an underlying local basket of stocks in local currency. So that's what you've got going on. That's why all these things. In addition, and Aaron brought up a great point because there was a big move in the peso last night. There's also a big move in the yen as well. But that's for the overall international. Argentina is one ETF that I own, and that's down too. And that's just because of that effect that you've got going on there. I have a question for you too. When we talked about a little bit about China and the implications, what about Taiwan, right? And I was actually looking at, and I'm long again. I got a few positions on. I'm long some Taiwan semi, but I think this is a good stock to watch today too because if there could be some kind of maybe diffusion of tensions along with this, maybe this is a stock to keep an eye on as well. Now we heard that they are doing a lot more manufacturing in the U.S., but I think if you look at this, and also if you look at the other semiconductors, right, this is also not really that much of an in trade. You're not seeing a big move out of Nvidia either. So, these names will be interesting to watch, but I would definitely keep an eye on some of the international areas too, just as a gauge of what could transpire over the next, not just today, but with the next couple of days.
I mean, you look at Taiwan Semiconductor, and it's funny, I had this on my Harris list, and then yesterday's action talked me into putting it back on the Trump list. I guess I should have left it on the Harris list because it is trading down $3.36. And again, my concerns were when I put it on the Harris list is that lukewarm interview about 3-4 months ago that Trump gave, and I forget who it was, where he talked about Taiwan, not protecting them at all costs. Not saying that he was going to leave them, but not like protecting them at all costs. Where we, obviously the last administration has said, you go in there, we're going to nuclear war for Taiwan Semiconductor. It's been like that. Trump seemed a little more lukewarm to that. And I think that's why you're seeing a little bit of weakness here, TSM. And then also the tariffs. I mean, to this point too, it's obvious tariff trade. Look at Taiwan Semiconductor. Now look at Intel. I mean, Intel, obviously a long ways away from being able to do anything that Taiwan Semiconductor can do. But if we're rah American, maybe Intel gets some more money here again, get the foundry business moving. I mean, Intel is definitely a Trump stock here at this point in time. It's up 5% here this morning. Nobody's talking about it, but that's a significant move. When tech is not doing that great this morning, it's kind of it's okay. Intel up 5% is a significant outlier here. That is definitely a Trump stock. So tariffs may be having their way with Taiwan Semiconductor and Intel, the beneficiary here.
That's a great call. I would not even be thinking about Intel this morning, but there you go. Something that's, made in the good old US of A, one of your best performers out in that group this morning. So great call there.
I think also just keep in mind Jim Cramer, and obviously we know Cramer's right, he's wrong, but he is on the bandwagon. He said it last 2 days in a row. Intel has bottomed, buy it now. So, good call by him so far. But if he's going to continue to cheerlead this thing, and he's probably going to be on CNBC this morning, keep your eye on Intel because now he's even got a reason to cheerlead it because this is a Trump stock. So I'm long a little bit of Intel. I gag at the thought of adding to it because it's been Intel and it's been such an underperformer. But if there was ever a time to maybe get on the Intel bandwagon, it might be under a Trump administration.
Yeah, and the other thing too is from a contrarian standpoint is they're taking Intel out of the Dow. Sometimes these names bottom once they're removed, from the Dow Jones Industrial Average. I believe that happens on Friday. But still, you can kind of think it's like a bit of a head scratch. You begin to like scratch your head a little bit and say, okay, they should have taken this name out of the Dow probably 2 years ago. And they're taking it out now. And sometimes that's when things actually bottom is when they're kind of throwing in the towel and saying, hey, we're taking this company out.
And funny, he's Cramer, because I love Jim Cramer, even though he's right, he's wrong. He's fun, he's entertaining, he's always got so much energy he brings. But what he said is exactly what you said. He's like, the Dow Jones Industrial Average just sold the bottom on Intel was his words. So they were saying the same thing. So it's funny. Our next guest in the background here, we're going to bring him in here, George Kalis from Prospero.ai. George, can we bring him in?
Yeah, let's do it. We don't have any intro videos, but we got George Kalis. Let's go ahead and bring him on pre-market prep. George, how are you doing this morning?
Thanks for having me on. I mean, in some senses, I'm doing great. It was a bit of a later night than I was expecting last night, but at least it looks like we got a conclusive election. So that's good. That's good for the markets. And the trade I've been talking about for a while, Dennis, my Tesla Coinbase trade,
Wow.
looks, I wasn't ready to bet on DJT, especially you saw like a lot more volatility there, but the Tesla Coinbase trade going into the election seems to be super solid. And I mean, I was quoted on like CNN, I was quoted all over for it. So it definitely got probably the attention that it deserved, but I am excited for that validation.
George, and I do a podcast once a month with George. This is how I've known George for quite a while here now. On Dave Lauer's podcast, we go on once a month. We talk markets. And last time was about 2 weeks ago, and you exactly were saying that. You're like, if Trump wins, it's Tesla, it's Coinbase. These are my stocks here. So great call by you. Obviously, getting the pops here this morning up 12% and 12% respectively. So they're both up significantly here, huge movers. George, I want to ask you, though, the $1 million question here is, though, at this point in time, what would you do now? So is this like the Trump bump, or do you see continuation potentially happening here?
I just bought more Tesla this
Oh,
morning.
he's buying more. He's added to it.
Yeah, I added to it, and just so everybody knows, I paper trade on the Prospero portfolio. So I want to be clear for those that don't know me. I am paper trading, but we do log it because we're a research platform. But yeah, I got in. It was already up 12%. Another name I bought was I bought Apollo because I do think financials are going to do well, and that's been one of my favorites. I bought that even after it was up, I think 4.5%. I think since then it's already up 6%. I mean, I think this is going to be just a huge day for the market, which is why I loaded up on some longs. I was pretty even long short heading into it, but I was tactical about my longs. And like, yeah, I mean, Coinbase was something that I was going to own regardless going into it. Like, even if Trump didn't win, I didn't think I saw the downside there, especially because I didn't think, if there was like a contested election or anything, people kind of like look to Bitcoin as like disaster insurance. So I thought that was the best stock going in. But today, I would say, other than you saw, like I got out of Nvidia yesterday because I'm worried about the tariffs and the semis. But I think there's a lot of winners that are going to win big today, and I think over the next few weeks. Assuming, I think we're gonna get another 0.25 rate cut. But I would say be careful. Not everything's gonna rocket ship, but I think if you're tactical, there's some obvious names that are gonna go on a run. And what I really like about Tesla, and what I was saying the whole time, is that the way Trump and Elon have aligned so strongly, or Elon aligned with Trump going in, I don't think there's any way that hasn't come with some assurances around full self-driving. So I think that's also going to play out on the revenues, especially in Tesla. Same thing with Coinbase. That's always just like my safest way, in my opinion, other than the BLOK ETF, to just get risk-controlled exposure to cryptocurrency. A little less volatility. But yeah, I mean, I don't think those are temporary things. I think they're going up today because I think the revenues are going to play out over the course of the Trump presidency, especially for those two names.
I mean, what about the regulatory environment here for Tesla as well? All of a sudden, like think about the genius of Musk here to a certain extent. At this point in time, on this day right now, we can say that this was a damn good move for Musk to get on the Trump bandwagon. Because imagine if he wasn't and he was full on. Because when you think about Tesla, it's really, a democratic thing, clean energy, electrification of cars. That's a Dem thing. So he completely hedged his bets here with, thinking that Trump was going to win. And he proved to be correct, because if you look at the other EV makers, Rivian is down here today. I mean, Lucid is down here today. I think you could argue and make a pretty strong argument that if Tesla if Elon Musk hadn't gone on this Trump bandwagon, that Tesla would likely be down today. So, I mean, this is purely, was a hedging, bet for him that is paying off in spades this morning.
Yeah, I think it was a good calculated risk. And the way that I looked at that especially was that I don't think it was binary in the sense that you bring up, right? I think that, the probably the worst tactical move, in my opinion, if he didn't win, was the paying voters, because I think that was the thing that if Trump didn't win, he could have seen some actual trouble for. The rest, I don't really consider the Democrats to be organized enough to do something like target Elon Musk in some way, especially because they would be supporting EVs. So I think that would have been a little harder to pull off outside of some of the stuff that I don't think would have gotten him in any real trouble, but could have, been some negative headlines, could have been, some issues for him there. But that's ultimately like why I think he did it. I think I've never seen a public company CEO of such a large company align themselves so strongly with one political party.
Yeah.
But I do think that was the risk reward for him, that the punishments, I don't think, could have come even close to the rewards of Trump winning. So I think that's why he did it. But even then, there was like, he's a famous atheist, and he was coming out and saying he was starting to believe in the teachings of Jesus Christ. And then, you had him on the. I listened to his live with or his spaces with Trump, where he was going on. I mean, this was a guy that was saying, we need EVs because we're all going to die, and I'm going to go to Mars because we're all going to die. And then he was on there, he was saying like, well, in the short term, we have to balance industry and renewables. So I think I think the only thing that was kind of surprising to me was how much kind of his really like what would look like his core beliefs were, compromised to go all in on Trump. But the flip side is like I don't think you could really half-ass a Trump support, because he wants you all in. But I think it's really going to pay dividends. Like Tesla goes from something where it's like, I don't know if they could justify the valuation with the Democrats. We might see it going down, to a company I could easily see go up 50% in the next year. I could easily see Coinbase go up 50%. I could easily see Bitcoin go up more than 50%. But as I said, I like coin a little more from like a volatility risk control perspective.
I mean, the biggest hurdle for Tesla is going to be regulation and obviously approval for FSD. And all of a sudden, you have, you're best friends with the president. I mean, how, it's got to make the path a little bit easier. And I think if you're looking at Uber this morning, everything's trading higher. Uber is trading down. So, I mean, there is a trade-off here. There is definitely, this is kind of the day. It's such an interesting day here, George, where you've got winners, clear winners, and clear losers. And we can look across the board and say, yeah, well, the stocks are up. Everything's kind of going up. It's not the case. There's a lot of stocks that, are trading in the opposite direction here. There are clear winners and clear losers here. What else are you looking at? Like, what else are you thinking, repercussions from now, that we know who the president's going to be? What else are you looking at?
Yeah, I mean, I think the chips are a little risky, but I think that AI names I think are going to do very well. I think the regulatory environment and I think the point that you brought up about full self-driving, I think if there's one thing that I always said about Elon Musk is he's very good with policy, even before Trump. Right? He got that like direct to sale at the dealerships when nobody ever got that. And so he's always been good at that. Pair that with Trump, who, say what you want about him, he knows how to force things through, even if they don't necessarily go through the traditional channels, right? It's kind of like a Teddy Roosevelt on the conservative end kind of thing, where it's just like he will use the force of his will to get things done. I do think he wants to be a leader in, not only cryptocurrency. I do think he's going to want to be a leader in AI. I do think I worry about the chip makers because of, potentially these tariffs, everything. And that's kind of playing out in what we're seeing today. But I think AI names that are trying to roll out AI tech, I think the cloud providers should do very well from this. As a result, and you've talked to me before, I think over the next 10 years, the cloud providers are who I like the most anyway. But I do think
what's the name? What's the top name you'd take out of the cloud providers?
I mean,
would you go into the Salesforces? Would you go into the ServiceNows?
Oh no, I'm talking about I'm talking about Microsoft, Google.
Oh, you're talking the majors.
Like,
okay.
Over the next 10 years, like that's who I would own. That's what I always say, all three of them, because I'm not sure who the clear winner is. I think the safest one is Amazon, right? Just because they're so good at entering markets. And they like my biggest problem with Amazon perpetually the last 2 years is that it's overpriced and you got the Bezos sell wall. But I think at the end of the day, over the next 10 years, I think that's the safest pick to reap the rewards on this. I mean, and then if you're talking about the highest upside, I think you're talking about, Microsoft, just because they're doing some really smart things in terms of, the Copilot, GitHub acquisition. Obviously, if you're talking about highest potential upside, you're talking about, OpenAI, ChatGPT. They're very good at using those to monetize within their universe. So I would say like that's how I look at it. But I never count Google out. There was that headline of 25% of their code is now, being done by AI. You never would think you were calling Google the dark horse in AI, but DeepMind, I do think that's the best pure AI brain project. So that's what I like. That's what I always say. Own those three, and you'll be happy for the next 10 years. I do think they're going to see an even friendlier environment in terms of Trump, in terms of regulations. I was actually on a panel about a year ago with the ex-CTO of the US, the CTO of the US under Trump. And basically it seemed that their policy was, and I challenged this a little bit, it seemed that their policy was, we don't want to do anything to get in the way of innovation. I think the Democrats are a little more sensitive to that, even though they like innovation. The Republican policy, especially under the CTO, just seemed to be like innovation first, America first on this stuff. So I do think at the risk of potentially unleashing some technology that we don't want to unleash, that's the downside. But I think the upside is also going to be a very friendly AI tech rollout where you might not see the guardrails that you might have seen with the Democrats on the pure AI side. As I said, I'm a little more worried about chips.
Maybe popping in here. One more question before we let you go here, George.
And then obviously, and then I think obviously you're gonna like. I won't be shorting any energy. Like I said, like we're seeing it be a little softer than I might have expected. Traditional energy this morning. But like before, I was gonna be all ready to kind of short the shit out of energy, even if it was like an undecided election that looked for Kamala.
Well,
but
from what I saw, it looked like there were still some nuclear names that were green this morning. I mean, even in a Trump presidency, if we assume that there's deregulation in the oil or more traditional energy space, do you still think, George, that the major tech companies, the Microsofts, the Amazons, are still going to try to go this nuclear route of powering their AI, data centers and stuff like that?
Yeah, I mean, and you kind of, there's kind of like this like Sam Altman like alignment with like I think nuclear is going to be part of that AI expansion, right? Because something needs to power these data centers. You saw that big like Microsoft BlackRock partnership to build a lot more data centers. I think nuclear is going to be, when I talk to my like deep tech friends, they say the one issue on AI is going to be, do we have enough compute? So I think that, I think the nuclear names that's a good point. I think that's another thing that's going to get a pretty friendly regulatory environment. But I think those were going to move forward anyway. But what you might see is things like, additional funding for that in the Trump administration, especially if you see us starting to get worried about compute, especially if there's like import issues with some of the chip stuff. I do think, the quantum computing names could do very well. IonQ is one that I think could do very well if there's like some short term like tariffs. I call them like kind of the chip cold wars that happen there. I do think, things like quantum computing, nuclear could do very well, even if traditional chips are not.
Great points, George. That's George Kalis. He's over at Prospero.ai. Again, we do the podcast with over at Dave Lauer once a month with him too. George, thanks for coming on here today, sharing your thoughts, and good luck. Tesla, rah rah. I'm with you. I'm long Tesla too. So
we'll see how high it goes. I think we could see it go up over 20% today.
Thanks, George.
All right, and that's the thing with all these.
Yep.
I was just going to say, with these stocks that are running, it seems like the type of environment where like they could, like Tesla could keep running all day today. And I don't know with a stock like Tesla or DJT, like where would you even potentially get in as a short at this point? Because we don't know how long this reaction, like is it, we talked about it off the top of the show, Dennis, that like this is just a knee-jerk reaction, but sometimes these knee-jerk reactions last days and they're short
can.
covering.
I mean, I'm not selling any of my Tesla here this morning, especially after listening to George. He's going in there. But I think, and I want Christian to come in here too. And Christian might have to go. He's got his other room going to start here too at Rebecca Trade Group. So he might have to go for a bit too. So maybe we just get, and Christian, if you want to stay on, you can stay on. But if you got to hop, I get that as well. What are your thoughts here? I mean, there's lots of good points brought up by George. The regulatory environment all of a sudden looks very favorable for Tesla specifically. But I mean, other thoughts here, like there's a lot of things to consider here. There's a reason that the banks are rallying like hell here this morning, and there's a reason that solar's selling off here this morning. It's like this administration is not going away. It's going to be here for the next 4 years. These knee-jerk reactions could be correct.
Yeah, and I would think of it as a bit of like an earnings trade event. And notice what has happened in some names like a Reddit. To Aaron's point, that these things could run for a couple. They could run for a couple days. It really depends on positioning. And if people are not positioned, then what happens is these things will run for a couple days. So I'm really watching this like 288, 290 level in Tesla. You could see price went right up to this blue line. It's a big level for Tesla. So I think that is really what I want to watch. And then maybe watch like 278. So like, strictly the price action at this point is something that I'm watching and thinking about things that really are under position. And we haven't talked, we started to talk a little bit about China and so forth, but also look at what the steel names are doing and look at what the transports, like, what countries are going to do well with, kind of the, like that onshoring. And I was looking at CSX. Now, again, all of these things have kind of gapped up, but I would watch CSX. I would watch those previous highs of like 36. You could watch a Nucor as well. So these are also
Nucor is gone.
Yeah.
I mean, this is a stock we haven't talked about here this morning too. Just stop right there. It's up 10% here this morning. I mean, this is a Trump stock.
Yeah, exactly. So I think, Tesla, I'll be watching Tesla today too. I have a position in my longer term account, but I don't have anything in my, this one I don't have. I did not play Tesla for this overnight trade. And again, congrats to the longs, but yeah, this is something that I'm definitely going to have my eye on in terms of, whether this can kind of continue and we really see the momentum in it. So, again, 290 is up. When we look at the daily chart, is right around this previous peak. So we'll see. And, we'll be watching a little bit of call activity too, to kind of give some hints. I like to kind of watch the option activity on a day like this to find out where that hot money and where that speculation is going to go into. Cliffs is a good one too. That's mentioned in the chat.
Yeah, Cleveland Cliffs is flying too, up 12% here today. U.S. Steel up only 4. Remember, U.S. Steel has that merger still on the table. I can't see Trump allowing, I don't think Harris is going to allow it, but I definitely don't think Trump is probably going to allow, a Japanese, steelmaker to come in here and buy U.S. Steel. So I don't think that changes under this administration at all. But, does U.S. Steel do better under a Trump administration as a standalone company? Absolutely. So, it's up here on probably its own company fundamentals, not so much, the prospects of they're going to let this, the Japanese company buy this company.
Guys, I'm going to jump. Have a great day and good luck today, guys.
Yeah. Thanks, Christian. Thanks for everything here. We're going to lose Christian's charts. So I'm going to try to present my charts here. I've got my charting software on a different computer here. Tomorrow will be set up a little bit better, but AB let me know 3 minutes to go. I was like, oh crap, Joel's not here, so we don't have the charts. So I'm going to just try to present here and see and make sure that I'm showing the right screens, because you don't need to see my accounts. So when I'm showing these, and I've never presented before, so it's all new to me. I go to present. It's not slides. I want to go to share screen. I want to share This is not right. I can't see it there. Hang on. Well, window. We're getting somewhere here now. Okay, there we go. We're going to share IB charts. Can you see IB charts here?
You did it, Dennis. Yeah, they're a little
I
dark.
did it. Look at this. You know, you can't. I got to figure it out here. So we got Tesla here up on the charts here. So now I can go. So this is Interactive Brokers Charting Service. Obviously, I'm IB client here, so we're using IB, giving them a little bit of promo here today. You know, so I think what we could do right now, we're going to get into, obviously it's 5 minutes before the open, so I'll give you a quick imbalance look here, and we can clearly see separation still happening. Oh my gosh, the bank buy imbalances are incredible. 1 million shares to buy on BAC. That stock right now trading up. I guess I got to change the charts as I talk about them. Usually that's done in the background, but BAC, you can see it's come off the highs here, but trading 44.55, which is still up 6% on the day. Banks are the big winner here. The biggest bank winner is right now Wells Fargo, WFC. Let's bring this one up.
So what
WFC.
is it? Just because it's deregulated, like they think it's going to be bank?
Yeah, so we learned this from 2016 that Trump is good for banks because less regulation, and banks are just full of regulation. I mean, this is, you know, the biggest hurdle for them for everything here. So a better regulatory environment is obviously going to be good for the banks. Wells Fargo is up way more than any of the others. I'm not sure why. It's up 12%, where you've got Goldman up 5, Morgan up 9, JP Morgan up 5. JP Morgan always has a little lower beta. Citigroup up 7, BAC, you know, is trading up 6. But wow, talk about this Wells Fargo. I mean, this is a huge move for this one here too. I mean, if we go out, and I don't even know how to use these charts, but if we go out just a little bit farther, we'll go out to, you know, the daily candle. You can see, you know, this just gives you a perspective, you know, on how big this move really is. They're pretty nice charts, actually, these Interactive Brokers. It's a big move. I mean, we're breaking out to multi, you know, to trying to bring it up here on my other screen, but this has got to be like a 2-year, 3. This is an all-time high. I think it's an all-time high for Wells Fargo. So, I mean, this is just, you know, incredible to where, you know, these stocks really got hit, obviously back to, you know, even going back to the banking crisis just of a couple of years ago. But wow, these are big moves.
Yeah, and I mean, like the banks, they've been doing pretty well. I mean, heading in, I mean, to make for Wells Fargo to make this move to all-time highs, it obviously had to be in a decent position, you know, ahead of this. But in addition to, you know, the deregulation, maybe some lower corporate tax rates for these banks. And I mean, I don't know, like I think a lot of these banks probably get attractive. And if you look at one specifically like JP Morgan or Goldman Sachs that does a lot of investment banking, if there's deregulation across the board and these investment bankings are seeing an uptick in deals and mergers and acquisitions, because we know that there was a lot of scrutiny for mergers and acquisitions in the previous administration. So if this upcoming one is different, then those banks could continue to do really well. And I think, you know, obviously a lot of them pay dividends. Some of them, I mean, like best of breed, your JP Morgans and stuff are probably still a little expensive.
Yeah.
But at the end of the day, if there's growth there, those could be interesting names to look at. And I mean, I'm in a lot of regional banks still from the collapse after the Silicon Valley Bank.
Well, I mean, and this is, you know, maybe they're probably up even more, I would imagine, because the regulatory environment for them is obviously, you know, going to be impacted too. KRE trading up 7.42%. It's a big move here too. It's hard, like, you know, when stocks move up 7-10%, like I have so much trouble chasing these, but I think we need more information here because, you know, just these are all knee-jerk reactions, but maybe they last. So that's really the issue that I got. You know, it's hard to just jump in. I'm at the open here, so I'm going to be a little bit tied up here. AB, take a couple tickers. I'm going to place a couple of orders here, just to, you know, in the background here. And, you know, AB's going to do a little ticker time with you for 3-4 minutes, and I'll be right back with you guys, but I'm here.
Yep, sounds good. So, you know, obviously one of the sectors that is not performing well, one of the only red sectors this morning has been the pot stocks. And you look at MSOS, you know, Florida, of course, rejecting the recreational cannabis bill that was on Florida's ballot. And I mean, you talk about a group of stocks that just has not been getting any love whatsoever, even before this election. So the MSOS, which is your pure U.S. cannabis ETF from Advisor Shares, is down more than 20%. So MSOS stands for like multi-state operators. And I mean, you know, if you're still like highly leveraged into pot stocks, or pot stocks comprise a significant portion of your portfolio at this point, like, I don't really know what you've been doing because you haven't been paying attention, because that has not been where the money is flowing whatsoever. And then checking back, I mean, just talking about which sectors are not doing well, because most are. The TAN down more than 11%. So your clear losers right now are cannabis and solar. And then your winners are basically everything else. I mean, it doesn't matter what you look at right now. The S&P 500 is still up more than 2%, maybe giving back a tiny bit of those gains there, as some people potentially come in and take profits. And again, like, the market doesn't like uncertainty. So is this reaction to the specific outcome of the election? Yes, I think in a lot of ways, yes. But I also think another large part of it is it's the market reacting to the decisiveness of the outcome. So even if it would have gone the other way, but was just as decisive, I do think the market would be trading up this morning. Maybe not as much. But again, like, I think the market's worst fears going into the election was that it was going to be as close as a lot of pollsters predicted, and that by Thursday, we still might not know who the next president is. And of course, you're not seeing that. So taking some other tickers from the chat that we can talk about real quick. Paul's saying XLU having a rough day as well. So yeah, the utilities were kind of your safety trade. And anytime now that you're seeing the market start heating up, there's no need for the safety trade because everything's green. The S&P 500 is up 2%. IWM is ripping. The regional banks are ripping. The safety trade isn't where money is flowing right now. Martin's saying buy solar long. So I mean, like, if you're invested in some of these solar names and you're very bullish on that company long term, I don't think just because the administration isn't favorable that those are like death sentences for those companies. But I would wait. I wouldn't touch any of these solar stocks down here right now, at least until we know. Because like, again, Trump is a wild card. He could come out and say, we're supporting the U.S. solar company. You know, like, I don't know what he's going to do there. So I would kind of wait. But certainly if these names keep coming down just on speculation that they're going to be in an unfavorable environment, then eventually they will be at a price point where they do get attractive. And if you were going to take a stab in the solar space, you do have kind of the best of breeds there. The companies that I think I would look at would be like an Enphase or a First Solar. Some of the other ones I don't think are even worth looking at. Like a Sunrun, to me, a Sunrun is not where I would be putting my money. Other stocks.
I'm actually done with the open here. Just got out of positions. I didn't trade a lot on the open, but I had a dozen. I've been trading out of stuff all morning, but I had a good dozen trades to get out of there just at the open. So did pretty good. Ended up having a pretty decent day. Overall, you know, we're just looking, and what we were talking about in the pre-market is starting to happen here. Q's holding up fairly well, but cracks here. You know, let's bring up Apple here for a second. You know, Apple here opened right at the high tick, really. Well, no, it opened kind of low. It opened actually down $1. Went down to the dollar, and it's bouncing around here. So you're going to see Apple just bouncing around here this morning. Maybe I'll just go to the 15-minute here and get a good feel. See the opening bar here where we opened and we crashed down, and now we're coming back up. So interesting enough that this dip that we saw in tech just a little bit here at the open is starting to get bought a little bit on a couple of stocks. Microsoft is the same story here. Just bringing it up. So this is hard. I don't know how Joel does talk stocks and trains the charts all the time. Microsoft 3-point opening bar here. It's trying to find its way. It's trying to go red. It's trying to go green. I don't think the market knows what to do with tech right now. I think the market, you know, obviously certain stocks like Bank of America, you know, have actually trading up 7%. The banks are strong. Tesla's still holding up very well. Actually, it's moving up higher here, up 35 points here now. I don't know if the market knows what to do with tech.
Yeah, one stock that's interesting winner too here is Robinhood, and that's of course because, you know, crypto is seen as a winner, and Robinhood has, you know, tied itself to the crypto industry now. So you're seeing Robinhood up 10%. Of course, Robinhood did start offering the election day contracts as well, pretty close to the actual election. They were kind of late in that game, but yeah, I mean, like. I don't know, Dennis. Like, I would be a little bit willing, I think, if I was long Bitcoin right now, to maybe take some profits. But at the same time, if you told me it's going to keep
hard
running
not
to
to.
100,000 in the next 2 weeks, I wouldn't be that surprised. So, like, I really don't know what to do here.
It is. This is a really, so this is the day sometimes, and that's why I didn't put a lot of opening trades on here, because it's a confusing morning. You know, it was obviously, we've got the knee-jerk reactions, those have happened. But the question is, and this is the question I don't have the answer to, is there going to be follow-through or not? Is there going to be follow-through on the leaders or not? What's going to happen with mega cap tech? I got to tell you, the follow-through right now is absolutely wicked in solar. So here's First Solar. It was trading at 195 most of the pre-market here, and 190. It just opened at 188 and it's straight down another 5 points. So, I mean, you know, you're going to get a bounce here eventually here, but this is like follow through. You're seeing some follow through on some of these stocks here. So, Tesla too, same story where, you know, opposite obviously story here. But if we bring it up, you know, we opened, we were down at 281 and now we just bought ourselves right back up and we're approaching the pre-market highs. So, interesting that we are seeing so far some follow through happening here.
Yeah, and someone posted in the chat, I haven't confirmed that DJT halted down. And again,
This is
like,
so, yeah.
the
So
worry
dumb.
here I would have with DJT, in addition just to the fact that the company is clearly overvalued and does not trade on fundamentals, is the fact that, like, are you allowed to own 50% of a company as the sitting president of the United States? You know, a social, I don't know. Like, so, like, there's a chance, maybe even if he is allowed to, I would say there's a chance that Donald Trump looks at this and uses it as essentially an excuse to sell some shares and say, like, look, I don't want to have a conflict of interest. I'm going to sell some shares here and take some of his money out. Because at this point, Trump's got like more than, I want to say, like $5 billion locked up into DJT shares.
Yeah. And again, to our point with DJT is, I don't know what the catalyst, if there's going to be that catalyst going forward here or not. So it's not really totally surprising to me that this is starting to leak back some of the gains. This opened at 45.77 and went straight down to limit down. I think the limit down, limit up system needs reform. We've talked to regulators about this before, you know, that they're very disruptive. We see the thing trade normally the entire pre-market when there are no volatility bands, and then it opens and immediately volatility bands, which is just so annoying. You know, if you're trying to trade this thing, you know, somebody's saying, oh, I want to get in, I want to get out. I can't even do anything because of the 5-minute halt. It'll reopen and then probably halt again. So it needs reform. The volatility bands were put in there, obviously, you know, after, you know, the financial crisis, you know, and stocks were just, you know, the flash crash as well, you know, so now, you know, we have the volatility bands in there, but they're very disruptive and disruptive here once again. But I know it's counterintuitive, but this isn't the stock that I'd be playing. I like, you know, George's thoughts, you know, going into the Teslas, maybe in the Coinbase, you know, if you're thinking this is going to be, you know, a change in administration is going to change things. I'm not sure DJT is the way I'd actually be playing the Trump trade.
Yeah, it looks like, I mean, Tesla, I mean, you talk about which stocks are strong here. Tesla continuing up 14% now, Dennis. So your portfolio must be looking good this morning. I mean, I think all our portfolios are looking good this morning.
A little bit better for sure. It likes the Tesla being the biggest position in it. So it does like that. So many other stocks, you know, the Trump trade is continuing here, but just bouncing, you know, around 5 below. We could look at that. It's down 9%, so it's continued down. Give us some tickers. Ticker time here. We can take some tickers. We've got an extended show here. Meta, as much as we've seen the tech trade starting to catch a little bit of a bid. We've got Apple trading up over $1 now. Microsoft trading up 3. Meta's not getting a hell of a lot of love. Really had a washout print right off the bat. The stock opened, you can see that opening bar, opened at 562, washed out to 555, now trading 560. So, I mean, you had the initial washout, but it's down 12 points. It's significant here. I wonder too, like Meta obviously competing with X and Trump aligned so much with Musk here right now, if that doesn't, you know, hurt Meta probably as well. Just that, you know, anything that Musk owns when he's that good friends with the president is going to help him. So I think there's a little bit of that Musk factor here with Meta as well, competing obviously with, you know, Facebook and Instagram and all the other social media platforms that Meta owns.
Yeah, and I mean, again, like that connection is interesting with DJT and X too, because like you mentioned, like Trump is back on X now. Like he's not even promoting True Social as much as he was from the actual business perspective. Clearly, from the stock perspective, that's not what people care about. They saw it as a bet on Trump. Palantir is another one that's being talked about. Of course, Palantir reported earnings, hit new all-time highs. And, Peter Thiel, co-founder of Palantir, is who backed J.D. Vance when J.D. Vance first ran for Senate in Ohio. So, like, you got to imagine that Palantir, which gets a lot of money from government contracts, I'm surprised Palantir is not up even more, to be honest with you.
It opened at 53, so wild opening bar here too. These bars are wild, and sometimes the opening event, especially after, is a lot of risk. But Palantir opened at 53, washed out quickly to 51.61, which almost put it red on the day, almost gave back the entire gains. And now the buyers have just come in, and the stock's sitting at the highs. So, I mean, now we're breaking out to all-time highs here, 54. So buyers have emerged here. Sometimes when you're trading, if you really want to get in something, have your order out there off the open, because, sometimes these moves, choppiness will grab you and get you filled. So if you're convicted on something, it's never a bad idea to have your order out there on the open, because they can really move. I mean, the opening bar was violent in Microsoft here. Microsoft's now trading up over 5 points. So we've seen, some of these stocks, the mega cap tech trade, come back. I was lukewarm. I didn't know where they were going to go with this, but they seem to be coming, and going up here. And also, if we're looking, the Bezos wall probably still exists. I wouldn't be surprised if he's selling more stock here today. But Amazon is indeed trading over 200 a little bit, although starting to leak. Where else do you want to go? What other stocks you guys want to talk about? We didn't do any earnings stocks. What about Celsius here, AB? Maybe we should do Celsius. We can go into Celsius here. Do you have the earnings report, CELH? Because this is one I thought, the lows might be in Celsius, but it looks like the earnings here are disappointing.
Yeah, so EPS came in at 0 cents. That missed the 4-cent estimate. Sales came in at 265.7 million. That missed the $267.1 million estimate. And I mean, if you remember when we had Todd Gordon on the other day, he pulled up some of Celsius's numbers and basically said, like, yeah, the next couple quarters don't look great earnings wise, but if you go out to 2025, 2026, that's when kind of that growth will be reignited, was what Gordon was saying. And so I don't think that Celsius hasn't given any forward-looking guidance yet. I think the call is actually ongoing, the call just concluded. So either way, you're seeing Celsius trade down 6% off this growth. But again, if you were following this story, I don't think this report is really surprising at all. And for me, like, I actually do still like this stock long term. I'm not looking for it to be a quick, 3-month turnaround. I'm more thinking in like a year or two, you're going to see that growth story return.
Well, valuations maybe come to a level where it's reasonable here. Interesting too, AB. October 10th low was $28.20. I'll just point that out there on the chart right there. We got down to $28.52 here in the pre-market, so that helped. That's the good news. So you've got a level here on Celsius. If you want to play by the dip here, I think your stop outs when you're making new 52-week lows. I always say stock making new all-time low, you got to go. But it didn't make a new all-time low here today. It held. So that's the good news here. I don't know. The bad news is stock's still down 5%, and it's in a vicious downtrend. So I'm not sure the story turnaround here is imminent, but at least that October 5th low held, or October 10th low.
It looks like Franz wants to look at On, which is
Sure.
an international stock. So we'll see how On is looking, because, I don't know. I mean, On is up 2% here. Okay, so we got an upgrade from UBS from $55 to $61. UBS maintains a buy on Holding, raises price target to 61. So getting some analyst love here on. You do have earnings coming up on Tuesday, November 12th. So that could be interesting. But again, I mean, I just don't know. Again, I don't think these tariffs are going to happen, but even a company like On, if they start announcing that tariffs are coming in and they're a Swiss shoemaker, and they're not cheap, if all of a sudden these, shoes start going from $180 to $250, that's not going to be great.
International sales are probably a lot bigger part than U.S. sales, so that's one consideration too. I'm not sure.
I don't know. I don't know off the top of my head, but they do sell a lot of shoes in the U.S. just based on from what I see. People wear them all around.
Yeah, I think when I'm worried about tariffs, it's like, you know, a stock like Five Below and just bringing that back where they're importing from China. Primary business is obviously in the US, if not almost all their business in the US. And then it's like, well, their margin's going to get squeezed. You know, we're going to have to go to 10 below because they're putting tariffs on the stuff we're bringing in here now. We can't get the stuff that cheap. And now all of a sudden our $5 store becomes a $10 store. It's like our whole business model could get attacked by tariffs. That's why this is down significantly here today, down 9%. I wonder how the dollar stores are doing just quickly, just looking if they're having similar issues. Oh, they are. Dollar Tree down 6% here now. Dollar Tree had that management the other day shake up, was looking good. Stock went up to 71 in the pre-market. That was just another selling opportunity here because Dollar Tree is down significantly. Dollar General following suit as well. These are tariff trades, folks. This is the issue here when you've got Trump administration coming in and, you know, he's rah tariffs, make it in the U.S. Dollar General sells a lot of stuff and Dollar Tree sells a lot of stuff made in China. That is an issue here. So, you know, again, I think it's going to be, you know, once we get clarity on the House, maybe there's going to be some movement there too. If, you know, the House went blue, then that could be a different story. But, you know, it looks like right now the House is going to go red as well, which means Trump could have, you know, a little more power than he did last time.
Yeah, and again, I mean, I think she just, I don't know really what to say, Dennis, because there's so much uncertainty. Because on one hand, you had Trump for 4 years, so we should kind of know what to expect. But again, I think the administration looks a lot different this time around when you look at, you know, who's in cabinet with them and whatnot. And I mean, at the end of the day, like, I do think you have people in there that will hopefully know what they're doing with the economy. I mean, I don't think they're going to end up being able to cut like $2 trillion. I mean, when Elon Musk was speaking at that town hall, he basically said, we're going to have temporary hardship if we actually cut $2 trillion. I don't know if they're going to end up actually doing that. So like, I just don't really know what to think about from the macro environment right now when you don't necessarily know what the next administration is going to do. And I don't think they know exactly what they're going to do. And they could probably come in and not really do much at all in terms of shaking things up from what's been going on because, you know, the economy has been doing pretty well and people would be happy, I think. So like, I don't really know, again, like what to expect here from the macro standpoint.
This Wayfair too, same story, probably selling a lot, and tariff trade is going to be an issue here too. It's down 13% here now. It's been an awful story for a long time here. I mean, the stock was trading up, you know, at $90 if we just go back out to the dailies here, you know, just about a year ago, and now you're looking at a stock here at $38.50 in the pre-market, just getting hammered. New 52 or getting close to 52-week low back. I believe just going out to the dailies here. We did have a lower low your August 8th low, or August 12th, sorry, August 12th low, 38.02. I mean, that's a logical little bounce area for it here, but hard to call a bottom when something's going straight down. And First Solar is down 39 points now here, AB. Like, you want to talk follow through, there's no bid here. I mean, the stock just continues to go lower, down 19%. This is ugly. This is a solar disaster. I mean, we haven't even went and looked at ENPH, which has always been a disaster. It's down 20% now. These are incredible moves, folks. This wasn't even on earnings. This is on the new administration, obviously. And also rates not helping it today either. But this is honestly incredible, some of these moves here. Solar Edge, which we've been talking about for a long time as potentially being, you know, in a lot of trouble correctly about that. It's down another 19%. Making a new 52-week low here today. Solar Edge in a whole world of trouble.
Yeah, and some other, I mean, like, you know, you look at some other smaller clean energy names. EOSE is one that I've been in and out, is down 20% this morning. That company also reported earnings here, getting kind of the double whammy there. PCT, another one, is actually up slightly, but yeah, I mean, like, I would not, like I said earlier, I would not be touching any of these solar names, at least until we have a little bit more clarity on what some of this economic policy is going to end up looking like in practice. Because all we can go off right now is based on what Trump and his campaign has said. But I don't think really, and the market is telling you that too, that I don't think really believe a lot of this stuff is going to happen, at least not right off the bat. S&P 500 here, Dennis, the SPY is leaking a little bit. We opened up more than 2%, now down to only up 1.7, around 1.7%, or $9.87 on the SPY. So, yeah, I mean, I think
I've got to just say, AB, the separation here today is nothing short of astounding. I don't think I've ever seen a market where you have certain stocks down 10, 20% and other stocks. Look at Goldman Sachs right now. Obviously, better regulatory environment for Goldman Sachs here. Goldman Sachs is trading up 60 points. I've never seen Goldman Sachs. I don't know if I've like probably back to like, you know, the banking crisis or the financial crisis. I don't remember, even on an earnings report, I don't remember Goldman Sachs going up 60 points. Again, it's a $580 stock now, so 60 points isn't like what it used to be, but that's an incredible move. So the question of was there going to be follow through here after the open is being answered very quickly, and the answer is yes. This stock opened at $567, which was up 40, the low of the day. And if you were fading that move, you were being severely punished for it because it's up another 20 points from the open. Wow. Wells Fargo, we talked about this one being up 11% in the pre-market. It is now up 14%. So continuing, the bank trade is absolutely on fire. Citi up 9%, Bank of America up 9%. JP Morgan, which is a more conservative bank, is now trading up 9%. Wells Fargo 13, Goldman 11, Morgan Stanley 9. To your point on the regionals, which you were making earlier, KRE is now up 9.6% here. These are incredible moves.
Yeah, and I wonder, I mean, like with the banks, I think because there is still question marks about what exactly Trump's economic policy looks like, I think if you're looking at the grand land, you know, the big landscape of all the stocks and everything, the banks are probably your most surefire thing that you're like, well, no matter what Trump does, whatever his policies are, they're probably going to be pretty decent for these big banks. And again, the deregulation, you got to also think about should help spur more activity in the, you know, investor in the merger and acquisition space, which ends up driving a lot of profits for these big banks. So, you know, I think like while some, you know, if you're looking at like a Meta or Amazon or something like that, you might be like, well, we don't know how Trump's policies are going to necessarily help this company. You know how they're going to help banks. So it's kind of like almost a safety trade within a day where it's not really a safety trade type day, if that makes sense.
Awful day for SMCI. We didn't get to it, but it did report earnings there last night. The earnings weren't the story here, though. The story was more that they still don't have that filing out there. The annual report that they've got to file, we still don't have clarity on when that's going to be filed. JP Morgan cutting the stock to underweight, which is a sell, lowering their price target from $50 to $23. We've also got Goldman Sachs lowering their price target to 28. Barclays lowering their price target to 25. Loop Capital lowering their price target to 35. This story has went, for lack of a better word, from bliss to piss, and this is just awful. So glad that I cut the loss of $35. You know, not even like, when was it? You know, like it feels like it was like a long time ago, but it was only 6 trading days ago where that thing opened up 35. When you start getting all these accounting issues here, you got to get out. Wish I would have sold it earlier, but you know, sometimes taking the loss is the best thing you can do. The stock is down another like 30% from when I sold it 5 days ago.
Yeah, and I mean the one thing here, I'm just looking at the daily chart on my screen. You know, I would say you want to hold this $20 level. It's a very psychological level. And going back, I mean, it looks like for a while, SMCI before its big run up last year was trading in a range of around $35 to $25. So if it can get back in that range, and again, I'm just talking about the technicals right now because you obviously have so much going on in terms of the company's fundamentals and the news flow that could change this on a dime. But if for whatever reason, you know, we're looking back here in a week or two, Dennis, and SMCI has consolidated a little bit down here around $20, I'll tell you what, I could be talked into something here.
That's your money. I'm not doing it. I'm done.
I'm saying if we're talking in 10 trading days, and SMCI is still kind of consolidating around $20, and we haven't gotten any more like negative news flow, I'm saying I could potentially be talked into taking a stab. I'm not ready to back up the truck on SMCI. I'm not that brave. I do like to go dumpster diving, but I'm not that brave.
We need clarity on that filing. We need clarity on that filing. There's still on a possibility the stock could get delisted, which would be just an epic disaster. So we need clarity. Obviously, the auditors quit. They need to get that filing out there. So we need a little bit more clarity there. And I don't think we got the clarity yesterday. And that's why the stock's down another 25%. This is just an awful story. We got about 7 minutes here left. They all want to talk Nvidia. We haven't mentioned Nvidia here yet, but as much as some tech is mixed, we talked about, Apple only being up 40 cents here. Netflix is in the red, Meta's in the red. As much as that is, Nvidia looks like it's getting bought here again here. So we just bring up the chart on Nvidia here, not far from an all-time high. I'm still long in the long-term portfolio. It's kind of been bouncing around quite a bit here this morning. The low was 141.96, but it's kind of in the middle of the range here right now. Went up, just kissed a new high because the old high was 144.42. This kissed 144.63. So it did kiss a new all-time high, but has then come off. And one thing to consider is the indices themselves. S&P leaking a little bit. Q's leaking a little bit. IWM leaking quite a bit here. We were up 6% this morning. We're only up 4% here. Lots to think about, S&Ps here trading, and leaking a little bit here too. Jury's still out, on what, this means. Obviously, certain sectors like financials are benefiting tremendously here, but there's pockets of weakness here in this market right now.
Well, and too, Dennis, you got to realize if you're just right now, like waking up and you're looking at your portfolio or you're looking at the broad-based market and you see the Qs up and you see the S&P 500 up, but how much of that is from Tesla alone? Because, Tesla is one of the biggest stocks in those indices, and Tesla is up 14%, or it was. You go under the hood, yeah, some of the Mag 7s are also trading up. Nvidia's up 2%, which is going to help as the biggest company. And then you go across, and Apple completely flat, Meta in the red, down 1.5%.
Yeah.
Google's doing well. Amazon is doing okay, up 0.5%. So I'd argue that looking at the S&P 500 up 1.7% or the Q's up, you take Tesla out of that, and I think they're up pretty modestly.
Yeah, Tesla's a huge part. You're exactly right. Tesla's a huge part of this QQQ gain here this morning. There's a lot of, little stocks or a lot of the mega caps. The little ones are actually doing quite all right. I'm looking like an Affirm up 5% here, looking at Upstart trading up 3%, Square's up 4%. Again, some of these companies are due to report this week too. Square's on Thursday. I believe Affirm's due to report here as well. So you can get, excitement ahead of those reports. Amazon's trying. It's trying to hold on to the 200 here, the Bezos number, but I think Bezos is right there probably in the open market right now. Sell. It's hard to fight those whales. We need more clarity on when Bezos is going to be done. I'm long Amazon, the long-term portfolio. I think eventually Bezos gets done selling. I think long-term Amazon's still going higher, but short-term here, we are into the Bezos wall.
Yeah, another stock that I saw mentioned in the chat showing some good strength today is BurkB, up almost 4%, which, if you think about just, Buffett's kind of basket of value-oriented stocks, but Buffett likes stocks that have a strong cash flow. And when companies have a strong cash flow and then all of a sudden the corporate tax rate goes lower, that's going to be really good news for Buffett. And I think the exact industries, the banks, the financials that you're seeing benefit from this reaction to the big Trump win. Buffett's coming out as a big winner today. Again, BurkB up nearly 4%. And that even gave up some gains though, Dennis, because BurkB was up at $400 or $464.
It's leaking a little bit.
What?
Holding up fairly well though. So last night, here I'll tell you the trade last night. So I was obviously the issue happened 6:30, 7 o'clock. I was making few markets too tight, got picked off, got short a whole pile of some ETFs. RSP was one of them. I was getting short XLI. I got picked off on that big DJT pop-up, meaning, that, all of a sudden, I'm sitting here, the market's here, and all of a sudden we get the news that Trump's, taking a couple of states, and the market goes to here, and I'm here. So I get picked off. I was scrambling. The one stock that I'm is going to benefit if Trump wins is his financial. So I was looking for every bank, but a lot of the banks had already gone. But Berkshire Hathaway hadn't gone up much yet. So I started buying Burke and buying Burke and buying Burke. And I was buying at 447, 448, 449. And, it saved my day really because I was able to get hedged with Burke. And obviously Burke is, well up over the market there now. So, even if you're short in S&Ps up 1%, you're buying Burke up almost 1%. Now with Burke up 3.7 and the S&P is 1.5, there's I'm always just, trying to stay hedged as best I can, but there's, 2% difference there right now. So Berkshire Hathaway actually saved my night.
And sticking with on theme with kind of the financials, which it's interesting. So I'm looking at the XLF right now, on track for its best day since November 2022. Now, just looking at when that was, November 10th, I want to say that was right after the midterm elections in 2022. So interesting to see XLF's, both of the last best days for that ETF have come in the aftermath of elections.
Yeah. Yeah, I mean, it's, again, the financials, we've talked about them all day. XLF, remember, its biggest component is Burke. It also has a lot of insurance companies in there. Not all banks, like a Chubb is only up 0.47% here this morning. It's given back most of the gains here. So it's not all financials trading higher. It's mainly banks. And you think XLF is all the banks. It's not. When you break it down, it's financial. So there's a lot of insurance, a lot of other things in there that aren't up nearly as much. AIG is barely up here. And then the biggest component is Berkshire Hathaway, which is only up 3.5. So that holds it down compared to, if you're asking like, well, JP Morgan's up 9%, Citi's up 10%, and Wells Fargo's up 11%. Why is the XLF only up 3% or 4%? And that's your answer. Did you mention pod stocks? I think you did earlier, right? When I was actually trading the open, didn't you, AB?
Yep. Yeah, we talked some pod stocks earlier. All right, we're coming up on 10 a.m. here. I saw some people in the chat asking us about Benzinga. There's really not, honestly, too much to talk about. It's essentially, Benzinga's been under different ownership over the past couple of years. I'm sure you guys, if you guys have been around a while, noticed, Raz wasn't around as much anymore and whatnot. And really, on Monday, they basically just let us know, all the three of us, Dennis, Joel, and I, that, they were essentially not going to be investing in video as much anymore. And just let us know that they were moving on from us and pre-market prep. And so that's why we came over here and did it. So just giving some more clarity there. There's really no ill will or hard feelings. I think, all of us are in agreement that best for us in the long term. And I think it'll be one of those things that we look back and say, like, yeah, that was the best thing to happen for us at that time. So there's no hard feelings, it's not like a bad breakup with an ex-girlfriend or anything. It is what it is. And I think, we're happy to be continuing to do the show, regardless if it's at Benzinga or just with you guys here in the chat.
Yeah, I have no hard feelings. Obviously management has changed, and no hard feelings here whatsoever. I understand business is business. 11 years, we had a great time on Benzinga. Pre-market prep was on there for 11 years. It was a long run. So we understand, but at the same time, we love pre-market prep. We wanted to keep the show going. So Joel, myself, and AB have brought the show over to this channel here. So this is where you're going to find us every day, on the Pre-Market Prep YouTube channel here. We're going to continue to go as long as we can. Obviously, we have a little bit of an issue because we need to get sponsors, because we're trying to keep the show free. We're going to want to keep the show free. We're going to do everything we can to keep the show free. And we think we'll be able to get some sponsors. But if you're interested in sponsoring the show, reach out to us. Let us know. Obviously, we're going to try to stay here as long as we can for you guys.
Yeah, ScarJo, that was one thing that, I think one thing that was a little bit frustrating, but it is what it is. Again, it's a business. And then, someone in the chat was talking about my audio. This is also brand new. So I'm working on getting a real mic and camera and all this. So thank you to anyone who's, hanging out with us and sticking with us through these kind of transitionary times. And on the other side, again, I'll have some better equipment to stream at home and everything. So that is not the norm that you guys should be expecting.
They're asking about the closing print. I do believe we're going to bring that show back. It won't be this week. Joel is, away here for a couple of days. But we are planning on bringing that show back as well. So we'll keep you tuned here. Keep tuning in to Pre-Market Prep. There's going to be lots of cool things. We got a lot of new ideas. We're obviously running this all ourselves now. So, we can do a lot of really cool things here. AB showing around. So
I was in the bathroom and I was like, no, this is like a little they have little meeting rooms on this lounge in my apartment building. And it's actually a good setup. But I need a better microphone and stuff like that. Then we should be good to go.
Awesome. Okay, thanks so much, everyone, for everyone coming here again today, and we'll see you guys same time, same bat time, different bat channel, but this bat channel, 8 a.m. tomorrow.